Well, hey there, everybody. This is Arlissa, Educator to Trader, back with another video for our upcoming week's events for the week of January 30th through February the 3rd. Looking first at the forex calendar. On Monday, we only have the loan officer survey. It's a yellow folder and it's even tentative, so it doesn't even have a time associated with it. On Tuesday, 8:30 a.m., we have employment cost index quarter over quarter, yellow folder. At 9 o'clock, we have the HPI month over month, S&P CS composite 20 HPI year over year. HPI is the house price index. It's the leading indicator of the housing industry's health because rising house prices attract investors and spur industry activity. The change in this purchase price of homes with mortgages is backed by Fannie Mae and Freddie Mac. That's what's going on with the HPI. This is HPI also. At 9:45 though, we have an orange folder. The Chicago PMI is coming out. Orange folder supposed to have a medium impact. 10 a.m. You've got CB Consumer Confidence red folder. The level of composite index based on surveyed households, surveyed about 3,000 houses, which asks respondents to rate the relative level of current and future economic conditions, including labor availability, business conditions, and overall economic situation. The CB stands for the Conference Board. Basically, it's a survey asking people how they feel about, their consumer confidence. This is interesting because it's coming right before we have the FOMC statement, which will be on Wednesday. But let's start with the Wednesday morning. Wednesday, February 1st, 8:15, we've got the red folder ADP non-farm employment change. At 9:45, you got the final manufacturing PMI. At 10 o'clock, couple red folders, ISM manufacturing PMI. The JOLTS job openings, also a red folder. We've got some yellow folders happening soon after that. Construction spending, ISM manufacturing prices, which I'm sure that's up there where, high. Ward's total vehicle sales is an all-day thing. And crude oil inventories. Interestingly enough, I looked on investing.com and crude oil inventories on investing.com shows up as a high impact item, even though here it shows up as a low impact item. But that's 10:30 on Wednesday. So keep in mind that the crude oil inventory at 10:30 in the morning, really, according to investing.com, is a high impact event. At 2 o'clock, we have the FOMC statement, federal funds rate. 2:30, we have a FOMC press conference. Of course, this data right here, talking about inflation, the points rise, points rise, however we go, y'all know about this. Anybody who's trading knows that this is something that moves the market every single time, which is why you have a red folder. Going on to Thursday morning, 7:30 in the morning, you got Challenger job cuts year over year. It's a yellow folder. 8:30 unemployment claims, preliminary non-farm productivity, unit labor costs. 8:30, those are before the market opens. 10 o'clock, factory orders month over month and natural gas storage at 10:30. Those are again showing low impact. But I really feel that sometimes when the market gets news on the end of a day, one day, like in this case, it'll be Wednesday, that the next day the market absorbs that information and responds to that information. So though we don't have any high impact items on Thursday listed here, doesn't mean that there won't be some movement in the market based on the information that was given on Wednesday. Last but not least, for the week on Friday, February 3rd, we have at 8:30 on Friday morning, average hourly earnings month over month, non-farm employment change, and the employment rate. Those are all red folders. So they're all before the market opens. 9:45, you got final services PMI, and at 10 o'clock, you have ISM services PMI. There's a few things that show up on the economic calendar for investing.com, but those things really, it's the only thing that really adds on here is the JOLTS job openings, which we kind of mentioned that already, and that's on Wednesday. And then the like the on Friday, this doesn't show up These don't show up in the forex calendar, but these speculative net positions, these show as medium impacts here and there at 3:30 on Friday afternoons. I think this is stuff to do with futures. The futures speculative net positions, the S&P 500, we've got this as a medium. This is 3:30. You can't kind of see that off to the side there, but that is 3:30. Let's move on from there to what we have going in earnings this week. This week is a big earnings week. Some of the bigger boys, even though they're not as big anymore, but the big boys are doing earnings for this week coming. SoFi, one of my darlings, is happening Monday before the market opens. We've got Philips before the market opens on Monday, GE Healthcare, Canon. On Monday after the market closes, you got Whirlpool, Confluent, those are the ones that I recognize. Then you have Tuesday morning, Exxon, UPS, General Motors, Pfizer, Caterpillar, McDonald's, Spotify, Phillips 66. These are the oil. Those are all Corning, all before the market opens on Tuesday. After the market closes on Tuesday, you got AMD, Amgen, Chubb. Let's look at Wednesday morning, Waste Management, Peloton, which I thought Peloton was done trading, but I guess not. Humana, GSK. Wednesday after the market closes, you've got Facebook. Whoop whoop. It's called Meta, of course. That MetLife Insurance. Thursday morning before the market opens, you got Merck and Lilly, Hershey, Honeywell. I've been to Hershey, Pennsylvania. Sony, and then Thursday after the market closes, if you got Amazon, Apple, Alphabet, Qualcomm, Starbucks. These are the bigger boys, I call them. And Friday market before market opens, you've got none of those. Only one that I recognize is Cigna. All right. So those are the things that we have for the week of January the 30th through February the 3rd. You want to trade accordingly. You definitely want to stay green. And yes, we're going to get this money. This is Educator to Trader. If you like these types of messages, please subscribe to the channel. All right, we'll see you soon. Bye. So, looking at the daily charts for SPX, I've charted a couple of zones just from the daily standpoint. At the Educator to Trader community, we trade SPX on a daily basis. We trade credit spreads each day, generally in the afternoon, so we can see what was the price action for the day. Then we do vertical credit spreads in the afternoon, only deploying our cash for about an hour and a half or 2 hours. Actually, we aren't even really deploying our cash. We're just leveraging it as collateral while we put on credit spread trades with a short period of time before expiration. That way, our money's not out there very long, and time decay is in our favor because we're doing credit spreads. So on a daily basis, we do look to see what is SPX doing. So I've charted it from a daily standpoint. This is the day chart, which means every candle equals 1 day. And what I see at this point is we've got a resistance zone just above us. Actually, we hit it on Friday, 4,097, which if you were, rounding it off, you might say 4,100 is the end of a resistance area. Just below us, there's a daily gap. It was actually a seller's gap between 4,017 and 4,036. This is a buyer's gap. So when we have these gaps here, if price comes in, generally there may be buyers waiting in here. So then we go on back up. So this area here can really be an area of support as well. If it happens to, the price happens to come back through this gap fully, then you have another support area below us at 39.80. There's actually a very small buyer's gap there too, maybe a couple of dollars worth of a gap there as well. And then the third support area going down would be at 38.97, could be down to, a little bit lower than that. The bottom of this candle is 38.85. So it could go as low as 38.85. Every time I put lines on a chart, you need to know that I do it just as each line is a zone. So even though it's a line on my chart, it represents a zone of about 10 points going above and below it, right? So I just write lines so I don't have a whole bunch of lines on my chart because zones really can take up a lot of space. So if I chart the daily and the 15 and the 5, it just gets to be a lot. So during the day, though, when we get to the afternoon time, when we're ready to start looking at entering the trades, we do look at the 15-minute chart and the 5-minute chart to see if we see some new zones that have been created during the course of the trading day, if we have some zones that have been created by price action. But this is what we look at on SPX each day. If you're interested in, trading along with the Educator to Trader community, then definitely look at the link in the below us in the chat and join up. See what we got going. Educator2Trader.com. Alrighty, bye.